Well, we've got Frank Ingarra of Hennessy Advisors with us. He oversees $1 billion in investments. Frank, let's start off with BP. You are a shareholder. You've got about 48,000 shares in your value fund, I'm told. Shares are down about 40% since this debacle began. How's your stomach?
Well, you know, we don't let emotions get involved in our decision-making process. It came into our fund in the beginning of the year, and what we do is we buy them based on a model and hold it for approximately a year. So we're not going to let, though unfortunate and sad it is, and how angry I am as a human being on this planet, we're not letting that affect our decision-making process in getting rid of the stock at this point.
But there are some questions out there about the decisions BP may be making that have direct implications for investors. They are paying their dividend this quarter. We won't hear till July if they're going to go through with it for the next quarter. How does that change your investment for you?
It's not going to until something happens. We found in our history and in studying at Hennessy that when you let emotions get involved in your decision-making process, you always make a hasty decision.
So you think they're going to keep the dividend?
I think they're not going to change the dividend until the government forces them to. Right now we have estimates of what everything costs. We know that their liability is $75 billion on the books. That probably will change. For the average investor, I don't think it's time to get in. But these cases get tied up in courts for many, many years.
Right.
So I don't think it's going to really be hitting their numbers in the short term. And I probably imagine when we rebalance this fund in the winter, our Hennessy Cornerstone Value Fund, we're going to probably look to get rid of it then.
You'll rebalance, trim perhaps, but I mean, we're even seeing the idea of a breakup or partial bankruptcy being floated. New York Times Deal Book putting that out there. It's a dangerous concept to float, but it is being floated at this point. What are you hearing from your investors? You must be getting calls on this.
Well, it's a small percentage of our fund. We own 50 stocks in that. It's less than 1% of our holding. So, we offer a diversified product, and so a lot of the other holdings in the fund are helping us out. We're pretty much underweight energy anyway, so we're a lot of consumer staple stocks in that fund.
All right. So talk to me more broadly about your positioning right now. You see S&P 500 at 1,200 by December.
Correct. Right now the market is not trading on fundamentals. It's all headline risk, and that's spooking investors. Investors, I think, largely missed out on the run from the bottom, and they're on the sideline looking to get back in, and now they're all panicked again. And that's the thing that concerns me, that will turn off investors for the long term again. But right now, I think there's just a lot of noise. You look at all the other markets, there's issues around the world, and the market that's doing the best is the U.S. We're on the best footing.
Yeah.
Granted, our jobs numbers aren't down yet, but I think we're seeing some precursors. We're seeing average hours work go up.
And
we're seeing profits go up.
You're buying discount retailers, though. You're
Correct,
betting
yeah.
on the consumer a bit.
In a lot of our funds, like Hennessy Cornerstone Value, Hennessy Focus 30, Hennessy Cornerstone Growth, we own a lot of consumer discretionary names, the low-end discount retailers, like a Ross Stores, a Dollar Tree, and a Carter's. And simply, our theory behind that is that the consumers are fundamentally changing their buying practices, and they want to get more for less.
All right. Thanks so much, Frank, for giving us a snapshot of your portfolio right now.